intend to resign as party leader, as Prime Minister.
Is Trudeau quitting? Did he quit? Did he resign? What the heck did Trudeau do exactly? The dollar, is it crashing? Where the heck is it going? And I gotta say, the population boom is turning into a population bust, maybe? What's going on?
Patrick, immigration taps have turned off. What's it gonna mean? And a heads up, rents are coming down. We're gonna look into what this means for landlords specifically. And then, do we have a fear of overbuilding? Yes, no, maybe. We're gonna dig into it in this episode number 55, the first of 2025. Get ready, it's gonna be a good one.
Oh, and by the way, we're adding some fearless forecasts. And always a polite, gentle reminder, hit the like button, subscribe, send us some comments, send us some love. Let's get those algorithms fired up.
So Patrick, yesterday was a very fascinating day for me. You know why? Because as Trudeau was resigning, or whatever he was doing, we'll talk about that in a second, I was getting nonstop messages from people that watched this show that were like, oh my God, you and Patrick are just going to have so much fun with this topic. So people were like, you got to give Patrick his red meat. And I said, oh, he's going to have his red meat. Don't you worry. So here we go. Patrick, what is going on? Trudeau resigned, or did he? Do we have a government? What's happening right now, buddy?
Well, you make a really good point in the last question you asked. Do we have a government? And, for all intent and purpose, we don't. I mean, not a government that's making decisions and driving things forward. And as a matter of fact, the good news around it is that a lot of the bills that they had proposed, which one of them being, capital gains tax, which is just a whole other story, a lot of these bills get shut down because they're not completed. So that's kind of some good news, because some of those bills were controversial. I didn't agree with them. So I'm happy about that part of it. But having said all of that, we literally don't have a government right now. Let's be really clear. By now, everybody will know that ultimately Trudeau resigned from his position as the leader of the Liberal Party. Now, that means that they have to now go into this whole process of choosing a new leader. And, they've suspended everything in between time. And so we're not going to know much until really the end of March. And in the meantime, we don't really have a government per se. We have people in place, but, big decisions aren't being made. Certainly the focus isn't on what's going on economically, let's face it. And that to me is problematic for sure.
What a great time for this to be happening, Patrick, right when Trump's going to get into power here shortly. Trump is going to take office shortly. He's got all these plans on tariffs. What a great time for us to be disorganized and start falling apart. Not like it wasn't falling apart before, but I'm just like, the timing literally couldn't be worse.
And it's hard not to focus on the downside of stuff. But I mean, let's face it, really when we look at what's going on in Canada right now, it feels like such a cluster screw. I mean, you've got no government. We've got the U.S. coming in, who's made very, very clear the tariffs that they want to put in place. Will Trump have some compassion? I doubt it. He's a savvy business guy. So he's going to go for the jugular. He may have some patience and want to create relationship in advance with Poilievre, who will ultimately become our prime minister. So I think he may be a little bit compassionate and have some empathy for what's going on in Canada right now. But let's face it, we are going into negotiations with the U.S. without a team that has any savvy, any brains. And how well are they going to represent Canada? They're just not. So I think everything's going to get stalled. It's a real mess, which is just, the good news is that Trudeau will be gone. There'll be a change of government. That's the good news. The pain is far from over, and we're going to go through a lot more pain between now and then ultimately when we finally do get a new leader in this country. And I'm not looking forward to the next few months, because there's going to be some things that really piss us off, guaranteed.
It's going to be make for some interesting reining in episodes. I know that already. I'm so excited for it, Patrick. That's the good news. By the way, you talked about it's hard not to focus on the downside. The good side is that it gives us a lot to talk about, and it gets you particularly fired up. So that's a good thing for this show.
Yeah, well, we'll see what happens when all the dust settles. In the meantime, again, we're going through some real difficult times. I think that we have to actually mentally prepare ourselves for that. Remember to breathe. This too shall pass. But again, as we go through the challenges that we face economically, we can talk about unemployment. We're going to talk about population. We're going to talk about housing. There's a lot of things that are the world still goes on, and Canada lacks government, lacks leadership. Not a great time for Canada.
Now, listen, Patrick, this whole episode we're going to frame as Fearless Forecast, which is like, as we talk about every segment of this show, the economy, the population. And now, right now, we're talking about kind of, the government. Let's have a Fearless Forecast here from you, a Patrick prediction, as I like to call them. Where do you think this goes? Now that Trudeau's quit, what happens next with the Liberals? Who's going to be the next Liberal leader, in your opinion? Give us your Fearless Forecast. And when are we going to have an election?
I don't know about who will be the next Liberal leader. I mean, there's certainly
Carbon tax Carney. Carbon tax
yeah, well,
Carney.
that's the thing, right? Carbon tax, Carney, whatever his, and I mean, there's even some conversation about Freeland. To be honest with you, I don't really care. They're
Do you
gone.
think?
They're
Do you
out.
think? Do you think Freeland for sure though? I mean, didn't they already run that bus over her?
No, 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 no. But she did, she took the high road. She resigned, which is, takes her up, actually positions her as being, I don't know, smart. But anyways, I don't even want to talk about who the Liberal leader is going to be. I don't care. I don't think it really matters for the next probably 8 years. And so ultimately, let them do what they're going to do. I don't want to even, I don't care.
What?
How's that? I don't care.
Gosh, Patrick, there's a lot of things I was expecting you to say. That's not one of them. But let's talk about one more thing before we move on past this topic. Have you watched the Jordan Peterson interview with Pierre Poilievre? Have you watched it? I'm sure you have.
Yeah, I watched a lot of it. I didn't watch all of it, but I did watch a lot of it. I mean, it's like
What'd you think?
45 million views, 45 million views. Well, I think it's good. I think any of the long format stuff, some people are arguing that it's, two white guys having this whole conservative conversation, and, they're far right and they're this and they're that. I think it's, for somebody who actually sits down and listens to these long format interviews, you can pick some real insights out of those conversations of who Poilievre really is, what those policies are going to look. Many say that he got too many softballs. I don't know what they wanted Jordan to do. Maybe they wanted Jordan Peterson to grill him or something. I don't know. I don't think that was the intention of that conversation. But I think Poilievre, from my perspective, what I did watch of it, I thought there was some really great snapshots in there of the direction that he wants to go, who he is as a leader, and some of the policies that he's going to put in place. And and let's make no mistake about it, he's not the second coming. I mean, at the end of the day, he's a politician. My concern about Poilievre, he's a career politician. He doesn't have business savvy per se, but at the end of the day, there is some concerns around that. And he's still a politician. He's going to make decisions that a lot of people aren't going to like, me included. I still have I'll still have the right as a voter to complain, which I will probably. But I think ultimately, when we look into the future, we've got something that we can clean up around this country in terms of how far left we've swung and a lot of the policies that are driving our economy. I think there's some forecast that I want to put in there, and that is unemployment is going to spike. And one of the areas that's going to spike, government jobs. So I think that is something that people have to prepare themselves for. The layers of bureaucracy within our government, we've talked about it a lot, JG. And so as much as we talked about the construction industry starting to slow down, given the slowdown in housing, we would be remiss not to point out the fact that when Poilievre comes in, he's going to start cleaning house. He's going to start taking responsibility for actually what he has talked about, which is cleaning up the bureaucracy that has slowed things down, increased cost, gets in the way of productivity. And he's going to get very focused on the country being productive again, which I think is a good thing, but that's going to come with some real discomfort for some individuals.
Patrick, I haven't watched the whole interview either quite yet. I've watched most of it, probably 2/3 of it, but I sent a particular clip, the part where they talk about real estate. I sent that to someone that I do business with. And it's interesting as this person doesn't necessarily have like full-blown conservative views as I would necessarily. They're much more kind of, they would probably call themselves centrists, but they definitely lean a lot more left than I do. Point is that they called me like right away. They watched the clip. They called me, 20 minutes later, and they said, JG, is the stuff he's saying, and this is interesting. This is someone I invest with, Patrick. This is someone that I work with on a regular basis. And they said this to me, and I was kind of blown away. But it occurred to me, oh yeah, they're getting the bulk of their information from like mainstream news, so they don't say. But and they said, JG, is it true that stuff he's talking about, how like the consultants cost so much money and like the bureaucracy takes so much? Like, is it true that a huge chunk of what real estate costs is actually bunch of bureaucracy around real estate. Is that true? And I said, okay. I said, it's funny that you actually question that because you're an investor with me. And I said, you personally have spent hundreds of thousands of dollars through Visture on these projects we do together for this exact same thing. And he said, I had no idea. And I thought to myself, isn't that crazy? You got an investor here who's in the trenches, in a sense, and still didn't really understand. I'm thinking, holy, no wonder the average person doesn't understand stuff. You and I, maybe, Patrick, because we're in it like this deep, but my God, it's just interesting. And this opened their eyes. And I just thought to myself, well, hopefully more people's eyes start opening because, yeah, there's a huge part of real estate, which we're going to talk about for the rest of the show, that is wrapped up in this bureaucracy. And that is what chokes everything down.
Well, like so many things, we normalize it. We operate in it and we have to normalize it in order to actually exist within it. I mean, there's only so much we can do. We push back, we talk about it, we try and vote about it. But in between time and in the meantime, we have to normalize it. Think about gas prices. I'll just use that as an example. Imagine we here in the lower mainland, I'm driving by a service station, a gas station the other day, and I think gas was $1.62. And I go, oh, wow, gas has come down. So it's like we normalize $1.80 a liter for gas. Like that should be the way it is. And ultimately, over the past 2 or 3 years, that's what's gotten normal. What's gotten normal within our housing and real estate industry is the cost of bureaucracy, the cost of development charges, the length of time, which is about opportunity costs as well as the cost of getting permits and the delays and the things and the hoops that we have to jump through all have been normalized. We have normalized our tax base and how we pay taxes on real estate and within the context of building and developing. I mean, it's just asinine what we have normalized. And so to your point, your client friend that you had that conversation with, they've just normalized it. Like they don't know anything different. And because maybe they're not entrepreneurial in spirit or run a business, you and I are always looking at efficiencies and ways to improve operations and to bring costs down. And the last thing that you and I as business owners want is to create bureaucracy within our own businesses. So bureaucracy is a button for you. It's a huge button for me. It's probably bigger than even Trudeau, the whole concept of bureaucracy and the layers that go with it. So there's costs associated with it and we normalize it. So that's my kind of rant around that.
All right, Patrick, let's jump into the rest of the show because we got a ton to cover here. So let's start with the economy. And then throughout every different part of this, I want to talk about fearless predictions of where we think things are going in 2025. And I guess we should get grounded before we talk about each sector like economy and population and the rental market and construction and so on and so forth. We should touch on the fact that and get everyone who watches this show grounded in the reality that real estate is a long-term play. You should be thinking in 5-year, 8-year, 10-year increments, not 5 months, 10 months, or 15 months increments, Patrick. And it's too easy for everyone, including ourselves, Patrick, to get lost in that. And we start thinking too short term. But when you're looking at real estate, you have to have the long view. And that is 5 years, that's 8 years, that's 10 years, that's 15 years is the way you should be looking at it. And that's hopefully what we get everyone anchored into.
Well, something that's interesting what's happening in the world because of the costs of housing and the lack of affordability, if you will. There was a boom many years ago, or a book many years ago that I wanted to kind of mention again, it was called Boom, Bust, Echo, which was really talking about the demographics. This was a book written in the 90s, which talked about the demographics, the boomers, that big population, what they had to do to, as they moved away from home, buying homes, when homes were like 3 to 7 times income, for example, versus the 12 to 20 times that it is today. But the point is that in that book, we have to look at the demographics. So part of what we look into the future is going, what is the demographic shift that's happening today? We know that millennials, and they've moved on to a new demographic. I don't recall what they're called right now. But anyways, the point is that affordability has become an issue for that particular cohort. The next cohort, which I think are X's, I'm not even sure anymore. But the point is, they don't even want to own a home anymore. And I don't know if it's
Generation Z. Generation Z is next.
Yeah. Generation Z. So they're not even looking at home. And it's not because of affordability. It's because that's not the lifestyle they want. So it's interesting, the shift of demographics that we got to consider. But when we go back to considering looking into the future, what's happening is that we're at the effect of the headlines that are saying houses are unaffordable, sales are down, rents are down. So as investors, we're getting all of the bad news headlines, and we're thinking about what's happening right now, as opposed to saying, okay, well, where is this going into the future? And that's the point of this particular conversation: is how do we look into the future? And this goes back to, what is the country doing? What is the province doing? What is the city doing from a economic point of view, and where do we see it going in the future? And that's what we're doing. We're investing into the future, JG.
So we want to talk about GDP, Patrick. Let's talk about GDP. What's our fearless forecast on where we think GDP is going this year, and kind of where we are right now?
Well, where we are right now is it remains flat. Arguably, we're in a recession. Certainly Ontario is driving the recession over the overall country, given what's happening in Ontario, particularly Toronto, GTA. But having said all of that, when we look at what Canada as a overarching kind of view, yeah, we're full on. It's going to be flat at best. I think we're going to get dipped negatively with the shift in government. They're not going to be hiring as much public service. That sector is going to get soft, and will get softer as we go forward. But ultimately, Canada economically, short of Alberta, Saskatchewan, ultimately is going to be, really flat at best, and arguably recession territory.
Interesting. I know there's a lot, I think there's a lot that is going to happen once Trump gets in. And I know that, the fact is what happens in China is going to also heavily play on the rest of this, right? And China's not depends on which side of the economy you look at in China, but there's some rough spots there for sure in China. And as a result, this is not helping us, and I'd be curious to see where that goes in 2025.
Well, I think you make a really good point, JG, which is we have to look at the global macro and say, well, what does that mean to Canada? And when we look at the global macro, it's been going on for 3 years now. We've got Russia-Ukraine war as one example of the many battles that are being fought. And ultimately that will have an impact, a ripple effect. We come back to, Canada when we consider what Canada is in the world and the lack of productivity that we have. So we as a country, and we started talking about the lack of productivity over 2 years ago when you and I first started shining a light on our general lack of productivity. The point is that now we're going to start feeling the effects of it. It's the lag that goes with it that is what messes people up. So on the negative side of it, we're seeing the lack of productivity start to really show up right now. Now, it's going to continue that way, but there's lag on the good news side of things as well when we look at real estate. And that's something that we have to consider, is there's a lag on both the bad news and the good news. So as these things shift and change. So let's just talk about just a quick example. So when we look at the fact that we're going to have a government change. Now, you're going to wait for the government to change before you start investing in real estate. I would argue that that wouldn't be the best move to make. The best move to make right now is to look for deals in an economy that's really soft, because there are motivated vendors out there. Yes, it's hard to find cash flow, but okay. So
no, it's not. No, it's not. No, it's not. I want to stop that shit. That's not true at all.
Well,
I'll come back to that.
No, but that's okay. You're right. It's not true. You and I know that. We've talked about it many times. But that's the story that many are telling themselves.
But that's a bullshit story. They want to tell themselves that story. They can go ahead, but it's not a true story.
It's not a true story. You're absolutely right. It's not a true story. If you're downtown Toronto, if you're downtown Vancouver, it's a true story. And certainly there are parts. And Vancouver and Toronto, they don't set the benchmark. They set the headlines, but they don't set the benchmark for the whole country. But people read into it because they don't get the concept that Toronto and Vancouver are our biggest populations. So they skew all of the numbers. So if you're listening to mainstream media, if you're only watching the headlines, you are going to get shut down and go, this is not the right time to invest in real estate. When we're arguing and we're pointing the business case for, no, this is the time. And we can't even stress enough how important it is.
Now, Patrick, I want to touch on population, but before we get to population, I want to just reiterate one thing you said there, which I think is brilliant. Is it was essentially 2 years ago. It was 2 years ago today that we talked about, Patrick, how we were really at what we thought was the top, and there was signs showing weakness into the future. And you just said something interesting, is if somebody looked at that time and started making changes then to their portfolio and made decisions at that point in their portfolio, they probably made some phenomenal changes along the way. And now we're saying, okay, we're in weakness today, but the future, meaning 2 years, 5 years, 10 years, doesn't mean we're going to stay weak forever. So it is time to look into the future and to make decisions today. And that's what is amazing about real estate. And I can't stress that enough, is with real estate, it's a slow moving train. You could see it coming from miles away, and you know exactly where it's going if you're tracking the right numbers. And hopefully that's what that's what we're trying to do, which is why you need to like and subscribe. But that's why we do in this show, is to show you where the train is going. And that's more important than where the train is today, Patrick. And we can't say that enough.
Yeah, we can't say it enough. And people have, I think in general, have difficulty. You and I have difficulty. We get caught up in the headlines. We get caught up in the emotion of what's happening today. And we have to get grounded in where things are going. So let's just talk a little bit about the government change ultimately. We know that one of the platforms Poilievre is to really get behind this concept of getting bureaucracy cut back and cut down, which should bring costs down. And when we look into the future of Canada with some leadership, and will all his policies be awesome? And I want to just point out here, we have to vote policy, not politics. We have to vote policy, not personality. And when we look at his policies, when we look at what Poilievre's put on the table for future policies, those are going to be good things economically. So we want to invest into a growing economy rather than chase a booming economy, as one example of when we look at where we see Canada into the future. Now is the time. And there's one thing I don't want to step over. And when we talk about, and we can show the slide about the value of, Canadian dollar, fiat currency in general, over 100 years. So $100 bill 100 years ago is worth about $5 today. And, understand something is, we can't stress this enough. The reason for investing in real estate now, like in this particular environment, if you will, is about wealth preservation. Our dollar is getting hammered. All fiat currencies are getting hammered. We need to get into hard assets. That is a wealth preservation conversation, and real estate is one of those hard assets that we believe strongly in. Some will do Bitcoin, some will do precious metals, and art and Rolexes, and there's all sorts of things. But the point is, you got to get your fiat currency put to work in hard assets.
Patrick, one of those, speaking of back to the government and policies, one of the policies that we're coming out of, and I'd be curious to see where we're going to the future, but we just went through this massive population boom where essentially it's been nonstop immigration since COVID. It was parabolic. You can see the chart here. Essentially, third quarter, all the way from 2015, you see it was steadily increasing, all the way to 2023, which was the epitome of kind of this population growth. This has a huge impact on real estate specifically. And in fact, a lot of the GDP woes we've had have been masked by this population growth, but that has come, or they say is coming to an end. And I'm curious where your thoughts are when Poilievre gets in, where this is going to go, because this could have the opposite effect going forward. And what I mean by that is population growth in the last 2 years has propped up our economic woes, our lower GDP, our lower productivity. Population growth has propped it up as it relates to real estate specifically. Going forward, I see the opposite happening. As we start to ramp GDP back up, if we have population decline and population growth is significantly slowed down, it will dampen our economic prowess, if you will. So what are your thoughts on that, PF?
Well, there's a whole bunch of wrap around population growth. The lack of productivity was offset by the high immigration. So people coming into the country, we were, driven by consumerism. We've talked about that many, many times. And so to your point is that there's a couple aspects of it we can't step over. Number one is as a population declines, which it is, by the way. And, on top of the actual slowdown in immigration in terms of, we're closing the gates, there's a lot of people that are moving out. They came to Canada to live this dream, and they just found out that they can't survive in this particular environment because of the cost of living, and they're not getting the jobs, they're not making the money, because we've got so many immigrants coming into the country, which we need immigration, but it's like on steroids, which isn't working. And so we have a lot of people that are unemployed because we don't have that many jobs. We can't accommodate all the people that we're opening up the gates to. So that's all to say this: you've got people moving out, you've got immigration slowing down. I think a new government, when Poilievre comes in, what we do know is that by the time he gets in and starts to be able to make moves around things like immigration and go through all the hoops that they got to go through, we're going to see a significant pullback in the population growth, which is going to have an effect on real estate. I think we're going to continue to see rents come down in many areas, depending on what property type you're investing in. But I think we have to be heads up around that decline in population growth. So the demand is going to soften in terms of what is out there, given, next topic perhaps, but given the amount of rental specific accommodations that are being built. So multifamily particularly.
We'll touch on that in a second, Patrick, but I want to make a fearless forecast right here, which is it was 2 years ago, 2.5 years ago, Patrick, when you and I on this very show talked about how those people that were investing in pre-construction condos were about to be washed out. And we said, be careful, guys. Don't buy a pre-construction condo for the purpose of an assignment and have no other backup plan in place. You will feel some pain. That was 2.5 years ago. Some listened. They're very happy they listened. Some went ahead, and some of them are really feeling the pain today. I am saying that this population decline, depending on how severe it is going to, and my forecast is going to wash out the landlords that aren't quite as sophisticated, the landlords that don't have good management in place, the landlords that haven't been keeping up on their properties, the landlords that are not investing in their properties, not keeping them in tip-top shape. Those landlords are going to feel the pain in the next year or two because of this. This population growth has been artificially propping up the rental market for some time. We've talked about it on this very show, Patrick, and the people that invest in their locations, the people that invest in that are on top of their game with leasing and have a good property in a good location and really take care of their tenants, they're not going to feel the pain at all. Not really. But those that have the rental by the garbage truck under the bridge, that haven't been investing in it, that needed a paint job 4 years ago, but they've been putting it off and putting it off and putting it off. And those are the people that are really going to feel the pain, I think, in the next 12 to 24, maybe 36 months.
Well, it isn't interesting. What I've discovered about my fearless forecasts in the past is I'm usually early, and then it doesn't seem to be like, I think things are going to happen quicker than they do. And what I've learned over the years is that things move quite slowly. I think that number one is the forecast right now is that actually we'll see some negative growth population wise. Whether that comes to fruition, we don't know, but that's how bad that.
You mean total Canadian
Yep.
population?
Yep, total.
Yeah,
They're
I don't know
actually.
about that.
I've seen. Yeah, no, I agree, but I'm just saying is that there are people that are like experts forecasting that we'll see actually negative growth population wise. So that aside, the point is that it takes time for all these things to have an effect. So for those of you who are investors as opposed to the pre-construction speculators or gamblers, if you're really investing, you want to make sure that number one, your properties are up to speed, that they're well maintained, that they're current. My forecast going into the future is I think that in some regions we're going to see an overbuild of multifamily. Now, what's happening right now, JG, is there's a lot of multifamily being built. That's fine. A lot of investors see the math work in that because now, with CMHC programs that are out there, they're building. So my point is this, is that if you own a 40 or 50-year-old traditional apartment style unit, you're now going to be competing against brand new units. And in order for you to compete, you're going to have to invest in your existing property, make sure you bring it up to speed. Otherwise, you are going to have trouble getting it rented out for any amount of money, by the way, because there's going to be a lot of options out there. So for those of you who are in the multifamily business, if you own old buildings, you are going to get buried by the new stuff that is being built, and there's a lot of it.
I have stories about this, Patrick. So I have a client. He had a building. It was probably 150. I mean, it's old. It's probably 150, maybe even 170 years old. It is not a young building. Old balloon frame, brick building, gorgeous thing, by the way, near downtown. Actually, he watches Rain It In. Fellow Rain member. I've been involved in Rain, and I think for almost 30 years now. Anyways, point is he had this place. It was tired. In fact, it was tired when he bought it 20 years ago, Patrick. It was tired then. And for 20 years now, he's been renting it and renting it and renting it. He knew it was really tired. And luckily, this investor is smart enough to know, like, I either have to dump this place and sell it for essentially land value, or I have to really put some money into this and rehab it. And he's putting a ton of dough into it. I think total he's putting over 400 grand into this duplex to completely rehab the lower, completely rehab the upper. And it's really going to work out really, really well for him. But that's the kind of moves that are tough to stomach for the average investor. But those are the tough decisions you have to make today. Because if he wouldn't have made that tough decision today, Patrick, that's the kind of place that in 2 years from now would not be able to compete. You wouldn't be able to get it rented. You would be vacant for months on end. You would get low rents. And at the end of the day, you would end up being in a really, really bad place. So those kinds of tough calls, investors have to make those calls today. And I think one of the best places for investors to invest their money is back into their own portfolio. So for current investors that are out there, instead of always looking to buy and grow and buy another door, sometimes you have to take a pause, take a couple of years, rehab what you have, increase the property value within your portfolio, and then go to the next level. And I think, Patrick, that's a tactic that's not talked about enough out there. Even you and I don't talk about that enough, but that's a good use of capital for existing investors.
Oh, that's so the difference between a sophisticated investor and an investor or somebody who's just speculating, because what you just said is gold. And I want to add to it, JG, which is I've seen this happen so many times as we go through these economic cycles. When times are good, you can rent anything out and you're getting good rent and you're cash flowing like crazy and you feel like a genius and life is good. The property is wearing out. All of a sudden we start to go into these downturns and you're having trouble getting it rented out, or you do get it rented out and you're not renting it out as much, but for as much. But ultimately, if you don't do this proactively and you want to do it reactively, you are going to get shut down in so many different ways, because when things are really challenging to get it rented out, you have to then renovate at a time where cash flow sucks. You don't have any money coming in. That property's upside down. The psychology of it about being proactive in the world of real estate. Yeah, but I got a great tenant in there now. And, rents are really good and it's cash flowing like crazy. Something that'll keep a tenant around is if you can go in and do a nice quiet renovation. They feel good about it. They'll even put up with the inconvenience of it. But all you're preparing for is the day that they move out. So that is in fact rent ready, even though it's not easy. But if you don't see this coming, and that's my fearless forecast, is we're going to hit that wall, especially in that multifamily space.
We're going to have two things happen at the same time, Patrick, which is population's going to come down and supply's going to go up a little bit, but that's going to feel like a meaningful difference to us who've been in the rental space for a time, because in the last couple of years, it's been the opposite. Demand has been through the roof with population growth, and the supply has been low. So it's been kind of doubly, it's going to hit us and it's going to feel like it hurts more than it probably should. But it's those sophisticated landlords and real estate investors that make those tough decisions today. They're going to benefit. And those that just kick the can down the road, man, that's just never a good strategy, Patrick. Kicking the can down the road is always a bad idea, I find.
Oh, you try and do it and you can get away with it until you can't get away with it. All I know is that the investors that I know and what I've experienced myself, and I know some pretty sophisticated investors, and what they've done over the many years that they've owned real estate is they stayed competitive by upgrading their units and before they, especially in that multifamily space. And let's be clear, JG, that's what we're primarily talking about, is the multifamily space. Will it happen in the small, duplexes, triplexes, fourplexes? 100%. You have to stay on your game. But given what's happening with the MLI Select program, and all of the new construction that's happening, that multifamily space is going to get hammered. And I think that's going to happen. Definitely, you're going to start to hear about it in the next 12 months. And then as we stretch out a little bit further, you're going to hear about it a lot more.
There is a third, we're going to keep talking about these rentals here, but there is a third component in the marketplace that you and I have talked about at various conferences we speak at, Patrick, but we don't talk about it here very much on this show, which is there's also the expectations of the market. So in general, the expectations of renters is they want nicer and nicer and nicer accommodations. They want newer floors. They want quartz countertops. They want black finishes. They want, really nice stuff. They don't want 6-panel doors. They want something that is nice, that feels good and feels better. So those are three major trends in the rental market in general that if the average rental housing provider isn't paying attention, they can get caught with their pants down. Supply is going to go up a little bit because of all this multifamily building. Demand, because of population growth, is going to come down a little bit. And the expectation of people has gone up significantly. And if you're not ahead of that by renovating your places, you're going to end up getting caught holding the bag.
Well, there's a point to be made here, JG, which, when we look at real estate, we often say treat it like a business. So if we're looking at this business model called being a real estate investor, being a rental housing provider, we also have to look at who our client base is. So let's go back, the book that I was talking about, Boom Bust Echo, back in the day, boomers, like I was, one of those boomers that moved out of the house.
You're still a boomer, Patrick. Oh, yeah. You weren't a boomer before, and now you're not. Like, you still are, just so you know.
Yeah. Okay, so when I was a young man, I literally moved out of my house at 17 years old, just before my 18th birthday, which was a pretty common thing for this age category to do. And so we didn't have a whole benchmark, a bar that was set around, granite countertops. We didn't have that expectation, so we were just happy to have a bed, and a box spring was like, wow.
If it didn't have cockroaches, that was a plus.
A bed with a frame, what the hell's that? Throw a mattress on the floor. But the point is that expectation is not there anymore. Kids are moving out when they're in their 20s and even their 30s, and they've lived with their boomer parents who have really nice homes because they can afford to buy a home. All of the stories that go with it. The point is that as a rental housing provider, we need to understand that the renters that are coming through our door have a whole different set of expectations, and we have to be clear on what are the expectations that we're willing to meet given our demographics. So something else to focus on. Treat it like a business, knowing that the majority of the demographics that are going to be renting are looking for something nicer in general.
Now, Patrick, I think those are phenomenal points, by the way. I think it's been a very great conversation. And I think before we move on off of population, take us through a couple of the components that you expect will slow down, because this is important, because certain segments of the rental market are going to slow down more than others because of this population slowdown. Because when they slow population, they don't slow it like across the board. They slow certain sectors, and that ripples through the rental market. So touch on that, Patrick.
Well, just quickly touch on it. I mean, primarily what we're cutting back on is temporary foreign workers, any kind of temporary worker, and student housing. Those are two cohorts that they've really cut back on and is really going to impact us, because those are, in fact, our clients mostly. So when we look at the population that is being cut back, now some of that population, by the way, will go through I was a temporary, visa holder, and they're going to change the rules probably and allow you to stay longer. Again, with this transition of government, we don't know what that's ultimately going to look like. Let's say in 2026. As we get through 2025 with whatever leadership we have or don't have, and what is going to be their policies in terms of priorities. My point is that population, immigration will be one of those points. Any new leader that comes in will say, we got to slow this bus down, and they'll continue to slow things down. So the key point here is that that's going to affect us, because those individuals, those immigrants coming into the country, are always going to rent. Well, guess what? We had a lineup of clients, a never-ending lineup of clients that are wanting to rent our units. That lineup is getting shorter and less full.
Well, and here's what investors can do, Patrick. I'll give you a couple stories of what we're doing for ourselves and for our clients at Vista Property Group. I'll get two actually brilliant kind of stories that really match this chart really well. One of them, I have a particular client who has they're currently renting to temporary workers. And anytime you're renting to temporary workers, in this particular case, I shouldn't say anytime, in this particular case, and I've seen it many times before, is you typically rent to a corporation that is bringing in these temporary workers. You'll rent to a farming corporation that is bringing in temporary workers, if you think about the farming community side of thing for a second. And usually, and what I'm seeing this on our side, is that farming corporation is renting that unit for above market. Let's just say it's a 3-bedroom apartment that should rent for $2,300. They're probably going to pay $2,600 or $2,700. They're willing to pay above market in order to put 3 temporary workers in there, and that's worked out really, really well. Well, that's an expectation thing, Patrick, where the people that have those deals in place, and I have several clients that have those kinds of deals in place, that's great, wonderful. They've made additional cash flow for the last year, 2 years, 3 years, 4 years, but they have to bring their expectations back to normal, which is you're not going to be able to rent that 3-bedroom apartment for $2,700 or $2,800 when you put it on the regular market after these temporary workers move out. So there's a question of expectations there. And I think that actually throughout 2025, it's another one of my fearless forecasts is, and I've actually seen it the back half of 2024, especially the kind of end of third quarter into fourth quarter, is landlords and real estate investors in general have had to reshift and refocus their expectations and bring them back down to normal, because there's been a lot of inflated expectations in the marketplace. And that doesn't serve real estate investors very well, because then they hang on to an old story. No, I used to rent this thing for $2,800 back in the day. And they wait and they wait and they wait, and they lose 1 month, 2 months, 3 months, 4 months of rent for absolutely nothing. They should have readjusted their expectation. And I think that's critical. And I think that's going to happen in 2025.
Well, there's there's the other side of that too, which is, what was and then what is. In other words, if you treat it like a business, any business, I don't care if you're making widgets or you're renting out a property, ultimately you have to change with what's going on economically in any business. And as your demand shifts, you have to actually shift and adjust to what the demand is. That is the reality of business and reality what happens in the world. There is that real rookie mistake saying, well, in order for this to cash flow, I got to rent it for $2,500 a month or $2,800 a month. I need $2,800 a month. The market doesn't give a shit what you need. The market is going to pay you what that property is worth given the current market conditions. So when demand drops off because population growth is slowing, and when supply increases because of all the multifamily buildings that are being built right now, for example, you are going to see the supply and demand ratio shift, and then rents will ultimately come down. That's the nature of any business, by the way.
Another place they're supposed to cut this population is study permit holders, right, Patrick? And that will filter through and impact people that are in the student rental market business. Now, we're doing a student rental right now. We're renovating for a particular client, and it's just perfectly positioned for a student rental. But we're doing it in such a way, Patrick, where if we don't get students at the price we want, it'll still make a phenomenal rental for a family or an executive rental. So we're actually straddling the line, and that's the kind of forethought that investors have to start thinking about when they're renovating is don't take a house and jam in 10 bedrooms and give yourself no option other than student rentals. Do it in such a way where you could actually maximize both sides of the equation. And it is possible, Patrick, with forethought. And that's something that we're doing for clients right now.
Well, it's smart, right? It's like repurposing. So I can use it for this, or I can use it for this. It just opens up and broadens what you can do on the business side of things. And it's such a great point is don't pigeonhole, put yourself into this, it has to be this or nothing works. You have to be able to set it up so that you can repurpose and go, okay, well, this works for this, or it works for this. And depending on what's going on economically, I'll use it for this or that. I mean, that's just smart.
All right, Patrick, let's talk interest rates, buddy. We need to do a fearless prediction on interest rates for 2025. I don't know if it's a fearless prediction, but anyways, I have my thoughts on where it's going. Let's talk interest rates, and then let's talk about construction, because one will drive the other, and vice versa. So what are your thoughts on interest rates? I'll give you my take after.
Well, how come I got to lead? Okay, so I'll go first. I think that people are going to set themselves up for disappointment. I don't think interest rates are going to come down that much. I think on the upside, like I literally think that if we're going to see a 50 basis point cut over the course of 2025, we'll be happy about that. When I look at bond yields, when I look about
Sorry, back that up. Did you say only a quarter point cut in 2025?
no, I said at the most 50 basis points in 2025.
Okay. So somewhere between 25 basis points and 50 basis points in 2025.
Yeah, I think it's going to be. I think a lot of people are going to be disappointed by the lack of cuts. The Bank of Canada remains between a rock and a hard place about what they're going to do, because we've got this economy thing happening over here and interest rates over there, and the impact of lowering interest rates. I think they're in a real tough spot. So I think
How so? How so, Patrick? Let's talk about this because the Bank of Canada. So number one, we know the economy is slowing down. We know, you have already pointed it out, we are on the precipice, if not already into a recession. A lot of people are saying we're already in a recession. In order to get us out of that recession, they're going to want to cut rates in order to prop up productivity. Productivity is not shaping up to look good at all, so that's pointing there. The only reason they wouldn't cut rates much more aggressively is because of inflation, but we don't have an inflation problem anymore, so that's not stopping them. So why the hell wouldn't they cut? Why not cut a point, 1.5%?
no, I just don't see it happening. And I think there's a lot of things that have shifted, not the least of which is what the tariffs are in terms of what the US is bringing the Canadian dollar against the US dollar, because that impacts the costs forward. And as a matter of fact, we're already going to be hitting the headwinds of increasing costs. So we think inflation's under control, and right now it is. That inflation is going to change over the coming year, and we're going to start to see inflation spike for different reasons, and they are going to it's going to stop them from lowering rates, because as soon as they lower rates, inflation will take off again, and they know that. And there's a lot of reasons besides interest rates that we're going to see inflation, not the least of which is what we talked about earlier in the show, which is around the global economic, the macro look of what's happening in the world. And with the US, right now, it depends on who you listen to, right? The U.S. economy, it's like Canada. The U.S. economy is either booming or it's busting, depends on who you listen to. But ultimately, when we consider that Trump's going to come in, he's going to get things firing up again. You're going to see inflation come back into Canada because of all this stuff that we bring over and all the business that we do with the U.S. So I think that Bank of Canada, economy aside, is going to be between a rock and a hard place, because if they lower interest rates, it's going to light the fuse and it's going to blow up. And so I think that what we're going to see is a real hesitation by the Bank of Canada to get too aggressive with rate cuts. And I think we're going to start to see inflation coming into late 2025 that's really going to piss us off.
Well, that is a hell of a fearless prediction.
I know.
Now that one, now you're finally starting to get into some stuff there, Patrick. But let me touch on this for a second. I want to dig into this because this is a little crazy here. Now, if they don't cut rates, they will have to prop up the economy some other way, typically by printing money. If we get a new government and they follow through on their promises, their policies, they will not print money. They will not outspend their budget. They will balance the budget. So this is shaping up to be a horrible situation if it goes the way you've just described.
Well, it's not going to be pretty, and I'm looking at this and going, because JG, the economic, the interest rate height has dropped from whatever it was, 6.25, 6.5. Now you can get mortgages in the high mid fours, for example. So the what's the word I'm looking for? The new mortgage, or the mortgages that are coming due. So the mortgages coming due it's not going to be as painful as everybody was forecasting and predicting. And so people have mentally adjusted. Go back to what I said earlier. They've already normalized it. So will interest rates come down a little? Yes, but I don't see them coming down a lot. And I hope I'm wrong, but I'm looking at it going, no, I don't think so. I think they're going to just look at it. They'll put up with certain amounts of pain, because if they lower those rates too much, it's going to take inflation right to a new level, which we're going to be battling against because of the global macroeconomic picture. We are going to see inflation happening. I think it's going to start to unfold. Now, again, it's not that they'll raise interest rates, although there's some that argue they will. I don't think they'll do that, but I just don't think they're going to cut like many are expecting. Me too, by the way. I was hoping like hell because I've got mortgages renewing, but ultimately it is what it is.
Now, well, we should talk about the bond yields in a second here, where those are heading. But let's back it up for a second. So if they cut rates, it'll weaken the Canadian dollar even more than it has already, which should in turn increase. By the way, a lower dollar should increase our exports to the U.S., which would be good. Tariffs aside, because we got to get through this tariff scare.
We don't export anything, JG. We don't frickin' export anything. That's the fundamental problem that we have. But anyways, that's a different conversation. Go ahead.
New policies coming in, though. New policies coming in. Hopefully we'll increase that, Patrick.
It will, but it's going to take a couple of years. I'm talking about 2025.
Yeah, fair enough. I do think, though, yeah, you're right. 2025, man, it'll go by like this, right? We're gonna wake up, we're gonna be like, oh wow, it's the end of 2025. Here we go. Paulie just got in.
There's 2025 for many sectors is going to be painful. So let's go back to interest rates. They're not coming down enough. Bureaucracy is still there. Development charges are still there. So all of this is still going to be painful. So construction jobs are, like you look at what's happening in the pre-construction world, let's say, and let's use Vancouver and Toronto. I mean, those are huge markets, big markets. There's no new stuff coming out of the ground per se. A lot of the stuff that we're seeing, the cranes, those are all projects that were started 4 and 5 years ago, 3 years ago. There's no new projects coming out of the ground because the deals don't pencil. They don't make sense. And not just from an interest rate point of view, but from a actual cost point of view in terms of what they're doing regarding development fees, permit costs, the cost of getting a deal done. So that's problematic. And in BC, for example, now it makes sense to do fourplexes. They want to densify, they want to do all those things, but the math isn't necessarily working, and it's harder and harder to get it to work.
We'll I don't want to get too deep into the costs of the baloney and the administration, because it just fires me up, Patrick. And then I'm going to go off the deep end. We don't want that. We're towards the end of this show. Let's keep it on the rails. But let's talk about construction, and let's kind of wrap this up on construction, because as you've pointed out, there has been quite a bit of multifamily dwellings and that's because of the CMHC MLI Select program, which so far is getting a lot of rave reviews from investors, and that has really helped with multifamily. And a lot of that stuff is coming online. As the years go on, more and more and more of it come online. You can see that orange, in this chart, that orange line there. I mean, since 2015. That sucker's just gone parabolic. I mean, we went from 20,000 multifamily units at the height up to over 140,000 now. That's a huge difference.
It is a huge difference. And so when you look at what's happening in the scenario of overbuilding given population pullback, again, the new builds are going to be the first on the list of potential clients who want to rent those units. And then you have to get very regional in terms of, okay, well, where's a lot of the overbuilding happening? And I've said this a couple of different times that Alberta's got to be very, very cautious with what's happening, because Alberta, it's easy to build. And I'm going to say specifically, when we look at overbuild scenarios, you have to look at Edmonton and Calgary. And I think Calgary's already hit that peak, and that's going to continue a little bit, but it's already starting to see some softness in different sectors of Calgary, as well as different property types. Edmonton's just getting ramped up. So they're well into it. That's what many think, but there's still a long way to go. And I think that Edmonton is at risk of overbuilding. And if I'm looking at Edmonton, to be honest with you, I think you got to really know what you're doing in Edmonton. And I would be more inclined to go outside of Edmonton into some of the smaller centers surrounding Edmonton as an investor. That's how I would look at it. I'd also look at Alberta. I would look at, I've said it before, Lethbridge, Red Deer, Medicine Hat. Grand Prairie, I'm a little bit skeptical about, but I cautionary, not skeptical, just caution. And there's other areas besides Edmonton and Calgary, is my point. And there's a whole surrounding area of those two major cities that I think can do well. But you still have to look at this particular chart and go, are they overbuilding?
It's a good question, Patrick. Housing starts in general, if you look at this chart, rental housing starts are up, condo housing starts are way down. And when we say way down, they're down from 80,000 to just above 60,000. So it's not like they're from 80,000 to zero, and I think that's something that investors have to remember. Single family trending kind of like, hobbling along the bottom, if you will, in terms of single family. That just continues to be the asset class, as you call it. What do you call it? Real estate gold, I think you call it.
Real estate gold. That's the future. Densification is the initiative of our government. As investors, we have to look at it and go, what's the strategy going forward? And single family, in my world, is where they're not building. They're just not. And that's because of the densification and the initiative around densification by the provinces and several of the cities. So as an investor, I have to look at it and go, okay, well, do I want to jump on the multifamily? Maybe. You better be very savvy at this point in the game. And single family, and when we talk about single family, we're talking about duplex, triplex, fourplex kind of single family space, detached or even semi-detached. Even a townhouse with a suite in it is far better in my world than some of the multifamily areas that are being invested in.
Yeah, wonderful. A lot of this, Patrick, is driven, at the end of the day, this is driven by consumer confidence. And right now, it is not looking good. Consumer confidence is not rebounding. In fact, if you look at this chart here, and it's a straight line down, Patrick, in terms of consumer confidence. It peaked at about 57, and it is now down to about 49, roughly. Definitely going down. I don't really see this going up until we have a change of government. What do you think is going to bring this up? What do you think is going to turn the tides here, bud?
Well, I wouldn't be surprised if we see a slight uptick in consumer confidence now that Trudeau's stepped down. Look at our Canadian dollar actually upticked. So you start to understand how impactful government is on a country, and so there's some optimism there. So we'll see maybe consumer confidence tick up. We have to look at consumer confidence. It's really emotion that drives our economy so often, given where Canada is today. So we have to consider that the consumer confidence, we have to pay attention to it. I like to look at it every month to see just what is the trend, because it really does dictate where we're going economically.
Yeah, interesting. This actually works hand in hand with the real estate outlook index, which is an interesting kind of, I would like to actually overlay a chart on this in terms of the price of real estate, because I think you're going to notice that as the real estate outlook index as the price of real estate goes up, the outlook goes down. You know what I mean? Like if you look at November 2023, that's when essentially pricing was just about at its peak and the outlook was at its lowest because pricing was too expensive. And then as the pricing started coming down, the index started going up, but then interest rates got the better of them. And then, you know what I mean? So on and so forth. So it's just interesting. If you overlapped the real estate outlook with pricing and with interest rates, I bet you'd see a very fascinating correlation.
So there's a couple things that we have to consider with all of this. And this goes back to when consumer confidence is low, when in this case, the real estate outlook, that is all market sentiment that they're measuring in that case. And this is when investors step back. This is when people pull out because they're not in the boom energy. And that just gives you an idea of just how much consumer confidence and that boom energy drives an economy. So my point is that investors who are savvy, who are methodical, who are educated and are paying attention, this is the time to get your capital to work. And so This gives you time to find deals, to buy deals. None of it is easy. It's simple, but not easy. We often use that expression, but this is the time to wade in. If I do a fearless forecast, I don't think that real estate prices, and this, especially in the detached, single family or semi-detached, those prices are not going to come off. They may chop sideways, but they're not going to come off too much more than they have already from their highs. And in fact, when you look at, for example, Alberta, Edmonton surrounding area, you'll see an increase. So it becomes geographic and it becomes very property type focused. But ultimately, real estate is not going to, whatever bubble people are waiting or thinking is going to pop, I just don't see it happening. I can't find a case for it.
Yeah, interesting, Patrick. Story on that is, for the first time ever in my entire career, I closed 2 deals on Christmas Eve this year. Just to give you a sense of the deals that are out there. I mean, we're closing deals Christmas Eve because, people want to get stuff moving. And I just thought to myself, I worked until like 4 o'clock on Christmas Eve. Finally, I said, you know what, guys, like, we're going to have to pick this up on the 26th or 27th. Like, I'm going to have dinner with my family. And that was the end of that. But there's a lot going on out there for the investors that are ready, willing, able. A lot of opportunity, tons of opportunity out there right now.
Well, we often say that confidence is rarely owned. It's most often borrowed. And, I encourage listeners to borrow some confidence from us because we do see a bright future. And not to say it's easy, by the way. That doesn't mean we're into a boom cycle. We're not. This is, and actually the fact is, for me anyways, is this is the time to start digging in.
All right, Patrick, we covered a lot of ground and we made a lot of fearless forecasts on this episode. So I'm looking forward to the next one, and I'm looking forward to an incredible 2025. Let's make this year the best year ever.
So my catchword for 2025, progress. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.